Exxon is out with better than expected quarterly profits. The oil major also outlined a new $10 billion stock repurchase program. Joining us now is Wells Fargo Securities Senior Analyst Roger Reed, who covers the oil space. Roger, nice to see you here this morning. You mentioned to us in break, and you were right, that this time last year, many folks were wondering if Exxon would be cutting its dividend. Now they're outlining cost cuts and a new stock buyback plan. What is the state of Exxon here going into the new year?
Yeah, Brian, you think about the change, a year makes a year and a half. But I think the key issue for Exxon at this point is if you look at some of the things they highlighted, where cash flow came in for the quarter and where they expect to take the break even. So break even in the low 40s right now, goal to get to the mid 30s in terms of oil price when we mentioned break even. And if you went back to 2020, that was around $51. So you had a company that's done a dramatic or enabled a dramatic reduction in cost and in their overall cost structure. At the same time, you've had oil prices go up quite a bit. And so you put those two things together, you get a much, much better situation here in terms of earnings and cash flow.
And Roger, it's Julie here. They're putting a lot of that cash flow to use by spending. They are increasing their spending now, right? As much as 45% this year for drilling on new wells. And there's an irony here too, right? Because the company is talking about going carbon neutral by 2050. Here they are drilling new wells. Is this the right strategy for them to be taking? Is that a good use of their cash?
Well, I think it's always tough when we talk out to 2050. As to exactly how things will unfold. But if you look at part of Exxon's what they would call net zero situation, it comes down to several things, right? You'll move into more renewable fuels on one part. They intend to be and have been and intend to remain, I guess I should say, a leader in carbon capture and storage technology. So you go back and look at this most recent offshore lease sale, and I know the big talk was how it has been pushed away. But the real story there was Exxon took leases in shallow water blocks off the upper Texas coast, and the idea is using those for storage. So I think net zero will take a lot of different forms. Back to the question of their CapEx. Oil prices are $90. We're hearing all kinds of talk about, shortages of supply growth. And so some of the increase in spending is necessary, right? And some of the spending increase is a function of getting back to what is normal. If you were to look at Exxon spending pre-COVID, 30 to 35 billion, they fell to 15 billion. So they're talking about a range in the low 20s, kind of splitting the difference here, really.
Roger, it seems as though there's a better tone, more of a halo around this report from Exxon compared to what we heard from Chevron last week. Which stock is the better stock to own here?
Well, a year ago, we went positive on Exxon. We were neutral on Chevron. We thought that a lot of what you've seen Exxon do here would come through, right? Companies get in trouble. Companies change tactics a little bit. They change strategy, and you've seen the positive outcome for Exxon with that. In September, we actually upgraded Chevron to overweight as well. So for us, I would say, we feel pretty positive on both. Exxon's tremendous improvement from where they were and the fears that were out there on the stock, made it a little bit better of a performer over the last, sort of 12 months or so. But both companies are doing what you want them to do, which is be careful with investments, generate better returns, get costs out of the system. Exxon a little more, internally focused. Chevron was able to do some acquisitions, and both have been able to take advantage of a improving market in terms of asset sales, which has also helped out.
Hey, I just quickly wanted to ask you about the reorg also, right? The company announcing yesterday, timing a little bit interesting or I shouldn't say it announced it. It leaked yesterday, seemingly, that they were going to be consolidating their offices, moving away from suburban Dallas, consolidating into Houston. Does this feel like the right move? It seems like Exxon now, compared with the Exxon of a couple years ago, is just a more disciplined company, and maybe that's another example. Is that your read?
From the outside, I wouldn't say the company was undisciplined before, but I will say that management is a lot more forthcoming with what they're attempting to do, both in the near term, medium, and the long term, than what we've seen historically. And I think that, reflects Darren Wood's, efforts as CEO. And I think it also reflects some of the things that have happened on the ESG front, right? That you have to address some of these issues with more clarity, with more specifics than before. The move to Houston, I mean, they built a campus on the north side of Houston that opened, I don't remember, 2017, 2018 timeframe. And there's been a little bit of a thought process. Wouldn't they move from Dallas to Houston given that new facility? So I'm not terribly surprised they're doing the shift. I'm sure between Houston and Dallas, there'll be some nice rivalry over, who's the winner out of this. But that's about all I'd really add on that front.
Yeah, although when it comes to the oil business, I think Houston's already probably the winner in that department in terms of the amount of industry it has there. Roger, before we let you go, because I know you want to hop off and get on the conference call, I think this might be the first work from home setting we have had with a turkey. Is that a turkey?
That is a turkey. He met an unfortunate end a couple of years ago.
Well, it makes it for a very unique work from home shot. So you have that going. He at least can be remembered in posterity for that. Roger Reed, thanks so much for being with us. Had to ask you. I had to do it. All right. Have a good time on that call. Senior equity research analyst at Wells Fargo Securities, covering energy for us.